What is up, guys? This is the Broke Executive, and today is the first in a series of sector deep dives for my Robinhood portfolio. You can see the balance is right up here over my head, and I will be looking specifically at the industrial sector of my portfolio, which has 3 companies in it. So without further ado, let's just jump right in. Zooming in on my industrial wedge of the pie chart, you can see the 3 companies I have within that sector, as well as the market value and percent allocation currently within that sector, and a quick pie chart breaking down exactly that size. So it's something I can look at quickly when I'm looking overall at how my stocks are performing, and this is how I'm able to see if I'm getting a little too overweight in a certain stock and within a certain sector. The 3 companies I have going from top to bottom of the chart right here is Emerson Electric, 3M, and Caterpillar. So I'll be quickly talking about each individual company, why I chose these companies. So we're going to go ahead and start from top to bottom with Emerson Electric. Emerson Electric is likely the least known company of the 3 that I'm currently invested in terms of a general market consensus and just you knowing these names off the top of your head. This is because they primarily focus in a bunch of industrial work, so a lot of factories and warehouses. A lot of these companies tend to be using the products and services offered. The most well-known that you and I are probably able to experience is they do heating and cooling systems for industrial-sized buildings and commercial-sized buildings. So if you're in a large, skyscraper, a large office building, chances are that heating and cooling system is an Emerson product or is one of its rivals' products. And through investing in these companies that you don't really hear about or know of, but large buildings are everywhere that need to be heated and cooled because, especially where I live in the US, it gets hot and cold. So we need products and services able to cater to those needs. And this is an industry and a company that does a very good job at what they currently do. Here you can see an overview of the company and what they do, which I do not have fully expanded, so you're not going to be able to read every last word. But feel free to look up this company. It is quite impressive, some of the work they do. They currently trade right around the $69 mark. Nice. And you can see their dividend yield is about 2.86%. This is actually a fairly competitive dividend yield, as well as if you look at history in which they've been paying dividends and increasing their dividends, it's going to be a little bit more impressive. You can see that Emerson Electric does in fact pay 2.86%. This is from Seeking Alpha, which the last slide was from Robinhood. And that's just good to be able to compare the 2 values because Robinhood doesn't necessarily update their dividend yields as often as Seeking Alpha does. You can also see that they pay out $2 per share per year, and they've been raising their dividend for 63 years straight. You can also see that they do pay dividends quarterly, as well as the most recent pay date, which was in September. I did mention this in my portfolio review that I posted at the beginning of October. And you can also see right here how many shares I own and my market value within my portfolio value. Keeping with the theme of companies that pay for ridiculously long times, I'm talking over 50 years, making them dividend kings, is my second holding, which is 3M. 3M is one of those companies that is so large, I don't think you even realize how many different products they have and offer. We're talking anywhere from the command hooks that are currently holding up this green screen to the glue that is holding the windshield onto your car. This is a company that has done a fantastic job of being able to diversify into different forms of income, where it's commercial grade products and consumer grade products. So you're able to see anything and everything coming from this company, and they have such a wide variety of products that all generate income and generate revenue for the company that they're able to pay out shareholders as a result. And this is one of the main reasons I love 3M, and this is one of my holdings. It was actually one of my earlier holdings within dividend investing, and I've been absolutely stoked to be able to have it in my portfolio this whole time. Here you can see the description of 3M and kind of what they do as a quick overview. Feel free to go on the Robinhood app and read the rest of it. This stock does have a 3.45% dividend yield and trades right around the $170 mark. Now, this can be a little intimidating to a new investor to see a stock price of almost $200 or higher, but if you're using Robinhood or another brokerage that offers fractional shares, you can put an equal dollar value into 3M as you do Emerson, as you do Tesla, as any other company. And most brokerages allow you to do fractional shares as low as a single dollar, so you don't have to feel too scared and too intimidated to jump into a company that costs huge values like 3M here, or even if we're looking at companies like Google or Amazon where their share price is well over $1,000. So looking at Seeking Alpha again, you can see 3M has a dividend yield of 3.44% and pays out an annual value of $5.88 per share per year, and their payout ratio is 70%. This is a little bit higher than Emerson Electric. However, 3M, again, has 62 years of dividend payments, making them a dividend king, as the Emerson Electric is as well. And the higher payout ratio can be a bit concerning, but when you're looking at a company similar to 3M that has so many different ways of making money, whether it's 3M strips to be hanging posters and wall hooks to the N95 masks that we've cannot been able to get enough of this past year, to making adhesives to put cars together, this company is doing a great job at being able to diversify their income and be able to raise that revenue values to be able to continue to pay that dividend and increase that dividend. So this payout ratio, although appearing slightly high, is not something I truly concern myself with at this point. And then you can also see I do in fact own one share of 3M. I bought this fairly early on in my dividend investing, and I've been more than ecstatic to have it this whole time. And I would not be opposed to picking up this company or any of my two other companies within the industrial sector. Now, the next and last company, Caterpillar, is not a dividend king, but it is in fact a dividend aristocrat, meaning instead of 50 years of dividend increases, they only have more than 25. But that doesn't mean that this company is any less valuable to my portfolio as the other two. Now, if you live in Michigan like I do, you know that these Caterpillar trucks and equipment are everywhere because they're constantly doing road construction near where I live and across the entire state. This is the company you think it is. They do, in fact, manufacture this construction equipment. And last I checked, construction is still going on and will continue to go on because everyone knows we can't fix Michigan roads. So at a minimum, there is in fact demand for this equipment to be out there. So one last time, looking at Robinhood, you can see the description of Caterpillar if you're not able to picture that bright yellow construction equipment or the toys you used to play with when you were growing up. This company does have a share price right around that $170 range, very similar to 3M, and their dividend yield is slightly lower at 2.46%. That is not a reason to shy away from this company because it's actually very diverse in the products and services they do offer. They do not solely do construction equipment, and some of the engines and motors that they use to power that construction equipment is also used in other products. Like their engines are used to power some of the yachts of the world. In case you happen to be rich enough to afford one of those, you can pick one up with a Caterpillar engine and know fully well that you do in fact own part of that company. Again, one last time checking Seeking Alpha, you can see the dividend yield for this company is 2.44%, which does in fact confirm Robinhood's dividend yield is fairly accurate because I will remind you now and probably many more times, Robinhood's dividend yield is only updated when the company pays a dividend, which means that there could be 2, 3, 4, 5, 6 months between the dividend yield being updated on the Robinhood app versus what the current dividend yield is when compared to the price per share. Now, Caterpillar pays $4.12 per share per year. I currently own one share of Caterpillar, and this is my most recent addition to my industrial sector. And yes, it is a very similar value to 3M and the rest of my sector, and I plan on keeping it roughly around that level, especially because this company, like the other two companies, do have a very formalized title of Dividend Aristocrat. The other two happen to also have Dividend King, but this just means that over the past 25 or more years, 27 in this case, this company has been able to pay their dividend and increase that dividend over time. Slightly higher to 3M, you can see the payout ratio of Caterpillar is 78%, and this does look a little concerningly high, but when you also consider that Caterpillar has recently taken on some debt to buy and acquire an additional company to further expand their business that's going to increase their revenues over the year and allow them to better pay out to shareholders as well as pay down that debt. You will also notice, if you happen to be quick with dates, that the ex-dividend date is the day that this video goes live. So if you own at least one share or even a fraction of a share of this company on October 23rd when the market opens, then right here on November 20th, you will receive a dividend for that company. The current dividend is $1.03 per share, which I will be receiving that dividend, and it will show up in my December portfolio review once I collect all of my November income and I'm able to share and report that with you guys. Now, I'm fully aware that these companies are some of the long-standing, very traditional companies in terms of dividend investing, and in terms of dividend growth, you might not necessarily see that same level of growth as a newer, smaller company. I'm fully aware of this. It's just within the industrial sector, I wanted to play it a little more conservatively because these companies aren't new and innovative. So you're going to be looking for the more boring, consistent companies, and those boring, consistent companies are the ones that have been paying that dividend consistently. That's exactly why it's called that. With that, that is all I have to share for this video. I'm more than happy to have been able to share my sector with you and be able to break down what companies I hold within the sector and kind of my logic and thinking behind looking at these companies and what I personally see within these companies. If you like the fact that I own some of the big names in terms of Dividend Aristocrats and 2 Dividend Kings, feel free to let me know, and let me know down in the comments which ones you have if you do own any Dividend Kings, because there's a fairly short list. I believe it's about 25 or 26 companies that have that title of Dividend King right now. If you'd want to continue watching my portfolio and sector reviews, those come out either at the first of the month for the portfolio reviews. I'm going to be doing the sector reviews on the 3rd or 4th week of the month, depending on the calendar and what other videos I have planned. So make sure you subscribe to watch those videos when they do come out. They will be coming out soon and consistently. If you would like to show off your portfolio or the sectors you have within your portfolio, you can hop over to the Broke Executive subreddit, and I will leave that linked in the description as well for you guys to check out, as I would love to start a community there and be able to talk and interact with you guys and be able to answer questions through that site, as well as I can use your questions in videos. Make sure you follow the Broke Executive on Instagram, as well as follow my Instagram and Twitter. They are all linked down in the description. And with that, I will ask you one more time to like and subscribe to make sure I know that you like the content, and I will continue to make this content, and you will be able to see it right when it comes out. And with that, I will see you executives in the next video.